Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, April 2nd, 2024. I am Frank Ochoa, aka PivotBoss. Before we get to the charts today, I do want to remind you to join me here later on this afternoon at 4 o'clock p.m. Central today, April 2nd, for our monthly market outlook for April and for Q2. You're going to want to join us for this one. We have a lot of great candidates here for the month ahead and for Q2 ahead, including candidates here that are crypto related, stock related, and futures related. A lot to get to. We're probably going to go at least an hour and a half of chart candy here for all of your enjoyment. So please join me here later on at 4 o'clock p.m. Central using the link in the description below. This is a Zoom webinar meeting that you'll just be able to jump right into very easily to join us for this event. So again, this is a free event that everyone is invited to, and looking forward to seeing you later on this afternoon at 4 o'clock p.m. Central Time. All right, here's a look at the ES in the daily time frame. The previous session closing the day on lows or near the lows of the session. Today already seen additional selling pressure here. A bit of an inverted check mark trend day down right out of the gate here, as we are now seeing a push into the previous week's low price. So the ES now trading below the previous week's low price of 52.60s. This market right now is still inside, for the most part, this narrow range. It is dipping just below it, so it's not quite a big downside break. So we could be watching prices just below the previous week's low here for signs of rejection. If there's rejection, we could be looking at a push back up within the range, a failure to recover that 52.63, and we're looking at more downside that could be seen ahead. Now, as we've noted before, this is a very narrow range right here over the last 6 to 7 sessions, and that range forecasts quite the move up ahead. If we can get a breakout from this move, or from this range, we could get a nice move that sees this price go 150 points, maybe more, in terms of expansion potential. Now, because we are trending to the upside, to have a push to the downside first could provide a failed breakdown opportunity where bears get trapped, and then you see this thing shake out and eventually break to the upside. At some point here, we're looking for at least 150 points, maybe 175 points of range up ahead, but we'll be looking at the previous week's low here to see how price responds. Again, even if we were to break down here, it could provide an opportunity for bulls to trap, reverse, and see an upside move from the pivot low upward of about 150 points. So again, could be quite bullish here, and there's about 140 points until this market hits the 5400 level as well. So if this thing drops into 5250 and can reject, 150 points up puts you right into 5400, which is the next major level above. So again, keeping an eye on the previous week's low here, but right now showing early signs of weakness. Any rejections of prices below that low could provide a little bit of a turnaround here at some point later in the day, or perhaps later in the week. One last thing with the higher value relationship here, month over month, that's what you tend to see. You tend to see price drop into the pivot range here and march higher the rest of the month. This is our first test into the pivot range for the month here, and that could provide a buying opportunity for a continuation up. Again, this market just hasn't really seen heavy selling pressure that would suggest an extended sell-off, but failing to hold, say, 52.36, the FOMC key level, that could offer quite a bit of selling pressure, and the previous month's midpoint here would be the major tipping point for additional weakness that could take this thing down toward the 50-50 level. All right, let's take a look here at the NQ. The NQ has a similar narrow range here, 1, 2, 3, 4, 5, 6, 7 days here. You can see how compressed it is. We're looking at about 700 points of range that could be seen upon a breakout move from this level. 700 points. At the moment, this price is also below the previous week's low. So again, whenever you get below the previous week's low, there's an opportunity for a rejection that could take you back up the previous week's range. At the moment, not seeing quite that rejection just yet, but it is something to continue to look for. Now, one thing we do want to watch here is if we do see rejection, Do we get that turnaround like we just talked about in the ES? A failed breakdown, for example, from this narrow range to break to the downside really hard and then to reject those prices and turn around, that could lead to, again, about a 700-point move to the upside. From 18.3, for example, 18.3 plus 700 puts you right into the 19,000 level. 19,000 would be the next major round number up, and it's also the 100% target to the upside of the key range that we measured here recently. So this key range right here provides some clarity on future targets, and 19,021 would be that next upside target. So again, stair-stepping higher off the pivot range here, month over month, holding, bouncing, holding, bouncing, holding, bouncing. We're now into that pivot range, testing it again. That could provide a bounce opportunity. Now the midpoint of the monthly range, the pivot range, is going to be very important here. That monthly midpoint around 18,260. If there's a failure there, and this market eats through that level in big fashion, that's where you open up the previous month's low. 17,822 would be the target in that case. Right now, still watching to see if we find some sort of strong low here early in the session. All right, taking a look here at crude oil. This one continues to put in new highs. This one reached a high today that was over 85s. 85.46 is the high. Big time push through 85s here. Again, it all started with the breakout through 80 finally. Pushed through 80 in big fashion. The pullback held just above 80, and we've now seen this thing continue higher. We've mentioned since the beginning of the year that 85.55 would be an early target this year for that, for the key range price action there. There's the key range high, there's the key range low, here's your midpoint. And initially we were looking for this thing to break through the top and reach 85.85 early in February. And it just didn't happen. Instead, after that big run, pull back, hold sideways for multiple weeks, and now finally starting to push through 80. That's why we mentioned before, once you get through 80, it could open up 85s quite quickly, and then we're looking for 90. 90 would be the next major level up ahead, 91.50 by way of the key range. So after seeing these pivot highs here, do we see another pullback ahead? And that's been kind of the MO of this market here. It's been able to go up a pace or two or three and then back hard. Up and down, up, down, up, down, up, sideways to down. So after this move, do we see a little bit of a pullback? If so, 82s could still be in play for a continuation up through 85s and toward the 90 up ahead. One last thing regarding this one, very clear compression here. That compression is 9 days in size there. 1, 2, 3, 4, 5, 6, 7, 8, 9. You got your 9-day compression, and you'll see right here the upside break occurred on this day right there. And so from that low, you're looking at a range that could take you 6 to 8 points higher just from the breakout low, and that puts you in about the 87.50 zone. So the low right there, 81.50 plus 6, that puts you at 87.50 as the upside target just from kind of that near-term range. So you're looking for expansion up toward 87.50 at the very least, and you got about 4 more days, including today here, to get there. So you got quite a nice continuation that could continue to be seen out of this narrow range. Even a pullback here could still be bought for a push and finish of that move into the 87s above. All right, taking a look here at gold futures. You'll see right now gold continuing to put in new highs. Another new high here today. New high of 22.87.5. The previous session was 86.4. Still seeing new highs here. Big time expansive move, and we're working toward 2300. 2316.7. That's your 100% target of this large key range. Finally got that big move and continuation higher. The bounce off 2000 was a super strong move that got you to 2200. That was a quick 200-point rally, and since then this thing has been able to push through that major tail event here, which was a day one rejection, and to push through the midpoint of that day one rejection would suggest a push through the highs of that tail, and we've gotten that move. And kind of like some of these others now, Any pullback here could be a buying opportunity as this thing completes this move toward 23.16. So very, very bullish for gold up ahead. The YM showing some weakness right now as well. The previous session perhaps showed the most weakness of any of the markets. Stop run day down, outside day down, and it's now approaching the FOMC key level from below 39,520 there, that FOMC level. Now we are also inside the pivot range here for the month. The pivot range, the monthly pivot range, has been used as a staircase higher ever since Q4. This market has been stair-stepping up off that level, and that could be the case here again. 39,390 is about where that midpoint is. At the bottom of the pivot range here, we could drop into that zone and still be a buying opportunity as this market continues to show strength. A failure at the mid, that's where the bias changes and we flip to very bearish mode. That's where we could end up seeing a move into the previous month's low and perhaps return into the rising year-to-date VWAP. So right now, short-term weakness in play, but we've seen short-term weakness on 1 or 2 day moves this entire year, and each time it's been able to bounce right back to new highs time and time again. So again, right now still below the previous week's low, still showing quite a bit of weakness from a day time frame standpoint, but even if we bleed out a bit more here today, our bull's going to be able to defend off the pullback and push this thing back up the range. Perhaps so, and the midpoint of the previous month's range is going to be very, very important for a directional bias. All right, that's it for now. We'll see how this develops here heading into the rest of the session. Remember, please join me here later on this afternoon for our monthly market outlook using the link in the description below, 4 o'clock p.m. Central Time, for a ton of charts and trade ideas ahead. Everyone have a fantastic rest of your morning, and I'll see you in the trading room. Take care.